Hello and welcome to today's class. Today we're going to see the trial balance. Till now, we learned how to classify accounts, write them into journal entries, post them into ledgers. Now, whatever balances that we have in our ledgers, we need to post them in the trial balance. So, what is a trial balance? Trial balance is a statement which has debit and credit columns in which all the balances of accounts are placed. Now, why is this done? This is done so that we can check the arithmetical accuracy of the books. Remember, accounts uses double entry system of bookkeeping. Double entry, that means two times. So, your debits need to be equal to your credits, and the trial balance checks that your debits and your credit balances are equaling. Now let's see what are the characteristics. It lists all the balances. At a glance, you will know which account has what balance. Then it can be prepared on any date. It verifies the arithmetical accuracy and it helps in preparing the final accounts. It provides a summary of each account. Please note that the trial balance is not a part of the double entry bookkeeping system. It is only a working paper. It is not a conclusive proof of the accuracy of the books, as there could always be a few errors which may not be disclosed by the trial balance. This just helps us in ensuring that this statement just verifies the arithmetical accuracy of all those entries that we have posted from the journal to the ledger. Now let's go on to the limitations. See, a trial balance is not a conclusive proof. It is not a guarantee statement that there are no errors in my books at all. They can be a tallied trial balance. It just indicates that debits and credits are equal. They are equally recorded in the books of accounts. So, even when the trial balance tallies, there can be some errors which may go undetected and which won't be disclosed by the trial balance. Now, what are those? Errors of principle. These are those errors which arise due to incorrect application of the principle. Then, incorrect application of accounting principles. Then we have compensating errors. These are group of errors which are committed in such a way that one mistake is compensated and set off by the other in such a way that trial balance agrees. Then transactions which are completely omitted from the books. For example, the accountant has forgotten to record a particular transaction which happened on 13th January. Now, both aspects of the transaction won't be recorded. So, still my trial balance will be tallying. Then, if we record the transaction twice in the books of account, or posting a correct amount on the correct side but in the wrong account won't be reflected in the trial balance. These you may not be you may not be understanding these right now, but in the upcoming lectures we will be dealing with each kind of error in detail and with the help of examples, so you will understand more better. Now, how to prepare a trial balance? So you take all your balances from your cash book and your ledgers. Whichever account shows no balance, you ignore that. And whatever accounts have debit balance, you will place those balances in the debit column. And those which have credit balance, you will place them on the credit side. Now, how do you know which account is having a debit or a credit balance? Go back to your account classification lecture. Remember your accounting rules. Debit what comes in, credit what goes out, debit all assets, credit all liabilities, debit all expenses, credit all incomes. So, based on those rules, I have just created a sort of summary here for you. You can just have a look, and this is at a glance, you will always remember. See, sales will have a credit balance, sales return debit, purchases debit, purchase return credit, assets will have debit balance, liabilities will have credit balance, expenses debit balance, income credit balance. You can refer to the earlier lectures if you wish, if you want a more detailed explanation on account classification. Okay. Now another item is closing stock. Usually, closing stock does not appear in the trial balance. So it is usually debited to the trading account and it is shown on the asset side of the balance sheet. However, if the closing stock appears in the trial balance, it means that it has been adjusted through purchases by debiting closing stock and crediting purchases account. So in this case, the closing stock won't be shown on the credit side of the trading account and it will directly be shown as an asset. You will understand this further when we do final accounts. Now, let's get into an example. The following balances were extracted from the books of Shri S. Pal on 31st March. You are required to prepare a trial balance and the balance amount should be entered as capital. Okay, they have not given us the capital in this sum. So whatever difference I will have between my debit side and my credit side, that will be shown as your capital. Okay, let's get into the problem. Okay, so see, I have my first is purchases. Purchases will come in my debit side. It has a debit balance. Stock, this is, see, they have clearly mentioned 1st April 2014. That means this is the balance of the opening stock. It will also come on my debit side. Debit, sales, credit, sundry debtors is an asset. So debit, discount received. It is like an income for us. So credit balance. See, carriage outwards is an expense, so we will have, it will be on the debit side. Carriage inwards also is an expense, so it is going to be a debit side. Cash in hand, asset debit balance, machinery debit balance. Okay, provision for depreciation on machinery. For now, you just keep in mind provisions always have credit balance. Drawings, debit balance. Returns inward is basically sales return. So sales return has debit balance. Sales return has debit balance. Now premises, this is an asset, so debit balance. Sundry creditors, credit balance. Okay, let's start writing all of this in our trial balance. This is the format of your trial balance. In the books of Shri S. Pal, as on 31st March 2015, trial balance. So 1. Okay, so number 1, purchases 1,70,000. Then I have next transaction, opening stock. 24,000. Number 3, sales. Sales always has a credit balance. Number 4, sundry debtors. Sundry debtors is another term which is called trade receivables. These are all the amounts which people owe us. So 23,800. It is in nature an asset to the company. That is why it will have a debit balance. Next we have discount received. Discount received in nature, it is an income basically to the company because our expense is reducing. So this will also have a credit balance. Number 6, carriage outwards is an expense. Okay. Carriage outwards is an expense. Expenses have debit balance. So 700. Next we have cash in hand. Cash in hand is an asset, right? So assets have debit balance always. So 3,500. Next we have machinery. Machinery is also an asset. Assets have debit balance. So 1,24,500. Next we have provision for depreciation on machinery. In the upcoming lectures, we will be dealing with the concepts of provisions and depreciation on assets. So just for now, you remember that provisions always have credit balances. Provisions always have credit balances. So we will write this on the credit side. 24,200. Our next is drawings. Drawings will have a debit balance. Then we have returns inwards. Return inwards. So what are return inward? Returns inward. So that means goods are coming inside the company. What this basically means is that it's a sales return. So sales return will always have debit balance. Next one is premises. Premises is nothing but an asset for the company. 5,28,000. Now we have sundry creditors. Sundry creditors, as you know, is a liability to the company, so it will have a credit balance 16,100. Next, we have discount allowed. Now we are allowing discount to our customers, so in nature, that is like a loss for us. Losses will have debit balance, so we will post it in the debit column. Next, carriage inwards. Note that carriage inwards is an expense. All expenses have debit balance, so 1400 in my debit column. Now cash at bank, my bank balance. Cash at bank is my asset, so assets have debit balance. I'll post it in the on the debit side. Then next is general expenses. General expenses, any expense, debit side, always debit balance. Now number 18, bad debts written off. Bad debts written off is nothing but a loss for us. Losses have debit balance. So we will post it on in the debit column 2450. And then what is the last one? Provision for doubtful debts. Again, we will be dealing with this also in the upcoming chapters. For now, you remember that all provisions have credit balance. 2380. Now, the next and the last item is going to be the capital. As per this question, we have to find the capital balance, which is going to be the difference between these two columns. So let's start calculating now. Okay, it's clear that my debit column is having more balance than my credit column. So let's calculate. Ayo. Let's calculate. 1,70,000 plus 24,000 plus 23,800 plus 700 plus 3,500 plus 1,24,500 plus 7,700 plus 3,500 plus 5,28,000 plus 2,800 plus 1,400 plus 17,500 plus 2,100 plus 2,450. So my total is 9,11,950. So let me note that down. 9,11,450. So this also should be my total here, 9,11,450. And my capital balance, it will come on the credit side, obviously. Capital always has a credit balance. So 9,11,450 minus 3,500 minus 24,200 minus 16,100 minus 2,380. And is there any other figure? I think so, yeah. Oh yeah, minus 1,05,000. So 1,05,000. So my capital is 7,60,770. Okay. 7,60,770. So this was all about trial balance. We dealt with a problem on how to make a trial balance and how to post the balances in the trial balance. In the next coming lectures, we will be dealing with more problems on trial balance, because in your exam, in most cases, they will give adjustments and the problems won't be this simple. You will have to make adjustments to the trial balance. We'll have to identify errors in the trial balance. So this was just a basic kind of problem to clear the concept. See you in the next videos where we will be dealing with a little more complicated problems.